Hey traders and investors, it's Serge Berger here. Today we're going to have a look at one of the highest probability ways of trading earnings. I've been on the record for years now saying that trying to anticipate an earnings move, i.e. taking a position before the actual earnings are released in anticipation of a certain outcome is a losing strategy over time. However, even if you wait for the earnings to report to come out and then do a trade, there are situations that are much better than others. More specifically, what I'm referring to is when the technical picture synchronizes with news flow. So in this case, what we're waiting for is a new piece of news, which is earnings, right? But if the stock also before earnings is at a critical technical juncture, then the move from a psychological point of view that you're going to make once the stock moves after the earnings, or hope if it moves right, is going to be much easier. So let me just give you an example right here in Nike. So Nike's actually today is on Thursday, June 26th. Actually supposed to report earnings after the close of the bell of the trading for the day. So you see, basically the stock has been going sideways for quite some time here, and it's now basically coming into this earnings report today, and it's at a pretty critical spot here in terms of, it's the narrow sort of wedge that it's created over the past, let's call it over the past say 3 months. Okay, so what we're having here is very clearly defined areas of resistance and supports, which again matches up with the news flow. So if after earnings the stock moves above say 77 bucks and can stay above 77 bucks, the likelihood that we're going to see a continuation move towards 80 bucks is good. Alternatively, if the stock breaks below this upward trending line here and below the 50-day, which is the yellow line, and say it goes below 74 and a quarter or something like that and stays below there, the stock has a pretty good chance of continuing to go to the downside, say down to the low 70s. So important when you wait for earnings to come out, focus on the stocks that already have a technically sound or bad picture, right? Whatever you want, but something that where you have clearly defined areas that you can focus around. If you're looking at a stock that has just absolutely no rhythm to it, it's just choppy and it's going nowhere, then that's going to be a much more difficult stock for you, at least psychologically, build your target and stop loss levels against. All does make sense, guys. If you've got any questions, as always, you can hit me up on Twitter. My Twitter handle is SteadyTrader. Thanks, and I'll see you in the next video.